Morning, everyone. The session that we are now in is, as Padmaja just said, global economy, fault lines of free fall. I don't think there'll be two better speakers on this subject. We have Mr. Raghuram Rajan and Mr. Abhijit Banerjee. It's an interesting subject because it comes at an interesting time in our economy. Growth rates seem to have now become a self-fulfilling prophecy in this country. We think we're doing better because we're doing 5%, which is better than the rest of the world. We are smug because of where we are, perhaps because we see a slowdown and other signs of economic difficulty elsewhere, which is a complete fallacy because I think this country can grow faster. And as the former president, Mr. Kalam, just told us, democracy gives you the capacity to perform. The bottom line here is that are we performing to our capacity or capability? So have we failed to seize the chances over the last 9 years? Has the economy more or less come to a standstill over these last few years? For years, Indians have heard bad news on the economic front, but were comforted by the fact that this was not as bad as how others were doing. We still hear that. There has been China, but we believe that because we are one of the two fastest growing economies, we must be doing all right. But that is a default mechanism. The inequities that we see all around raises doubts about reforms, and the jury is still out on reforms because reforms with a face and old-style economic management is under question. We are also aware that the poor have to be helped, but are we doing it right with our combination of microcredit, employment guarantee schemes, and straightforward financial aid? Has that now become an instrumentality to actually buy votes? I have with me, as I said, two extremely distinguished guests who are equipped to answer some of these questions. Dr. Raghuram Rajan, Chief Economic Advisor to the Government of India, and Dr. Abhijit Banerjee, Professor of Economics at the Massachusetts Institute of Technology, and both of them have turned their work into something of an art form. Let me introduce Dr. Raghuram Rajan first. It's only appropriate that Dr. Rajan, the author of Fault Lines, How Hidden Fractures Still Threaten the World Economy, should be here today to talk about the global economy, fault lines or free fall. He has been Chief Economist of the IMF, Professor of Finance at the University of Chicago's Booth School of Business, and been on the government's Committee on Financial Sector Reforms. He's a reformer, make no mistake. He has a reputation for candor, and I'm sure we'll see some of that candor in the next few minutes. But he's not known to jump to conclusions unless he has had the kind of data that he wants. It has been said that he's a bit circumspect about making prognostications because of the volatility of the Indian situation. This morning one read that Raghuram Rajan had said that he can actually see green shoots in the economy. This is why it is heartening when we heard him say, while speaking about the economic survey, that a turnaround is around the corner with a likely 6% growth over the next financial year. Ladies and gentlemen, I give you Dr. Raghuram Rajan.
Thank you for that kind introduction. What I want to spend a few minutes on this morning is first talk a little bit about the global economy and talk about how it might be related to what's going on in India. And I'm not going to spend a huge amount of time on India. We'll spend some time during the question and answer session. So the diagnosis for what ails the global economy after the initial diagnosis that this was a cyclical recession and it didn't seem to come back, the diagnosis now is the problem is really one of debt overhang. Too much debt across the world, whether it's government debt or household debt, stemming from the financial crisis, and therefore it's taking longer to recover. Now, I think this is a reasonable diagnosis, but it's very partial. What it presumes is the nature of global growth before the great financial recession was in fact sustainable. But if you look at many of the sources of that growth, especially in industrial countries, a lot of it was fueled by debt, more and more levels of debt, whether it be at the government level in places like Greece, or whether it be at the bank level in places like Ireland, or whether it is at the household level as in the United States. So there was a massive amount of debt-fueled spending, and of course, with the over-indebtedness, that has come to an end. But the answer, the remedy is not to essentially reduce the level of indebtedness and see the merry-go-round start again, but really to figure out whether that's the only way to spend. It's hard to recreate the debt-driven demand that existed before the crisis. It's probably unwise to do it because it was demand led by people borrowing themselves further and further into trouble. Now, I want to emphasize, this is not something which happened in the 1 or 2 years before the Great Recession. It's not something that happened 5 years before the Great Recession. Ever since the mid-70s, the level of public debt in industrial countries has been rising steadily. And the recession was, in some sense, the straw that broke the camel's back. Now, what has been the typical reaction to this? I would say it's the typical cyclical tools of government policy. We've had extremely low interest rates in the industrial West and initial attempts at substantial government spending. Now, these are the tools that work either when you have a cyclical recession, a temporary slowdown, as we've had many times in the last few decades, or it works in the midst of a deep depression. But what if you have what I would call a structural recession? The real problem is that the sources of growth have attenuated over the last 20 years in industrial countries. We've replaced that growth by debt-fueled growth. We've come to the end of debt-fueled growth, can't borrow anymore. Now we have to figure out new ways for the West to grow, and that is much harder than borrowing your way into greater demand. So what we've seen in the West is really what happens when you try and deal with this deeper structural problem with the typical tools that you have to deal with a cyclical recession. You spend a lot of money. It creates some demand for some time. But when you stop spending that money, as a number of industrial countries have had to do because they've seen their debt levels increase tremendously, they can't keep pumping money into the system. They can't keep running large deficits. When they start shrinking those deficits, growth goes into the tank once again. That suggests there's something deeper than simply pumping up the economy for a little while. That's useful when all you need is a little stimulus, a little encouragement, a little animal spirits. But there's something deeper that seems to be wrong, and I would argue it is finding out what the fundamental roots of growth are in those countries, finding growth from increases in total factor productivity and so on. So every time you don't take care of the fundamentals, but you do the cosmetics and you stop the cosmetics, growth plummets once again, as we've seen in the industrial countries. Now, it is not true that the emerging markets are immune to this. The emerging markets grew very strongly post-Great Recession, as in India, as in China, because we injected massive amounts of stimulus into the system, in India, in China, and so on. But there was a problem. The problem is the slowdown was in the exporting sectors in these countries. Domestic demand in many of these countries was pretty okay. But the stimulus was rather indiscriminate. And as a result, a number of these countries across the board in emerging markets, Brazil, China, India, suffered from excess, overheating, and have had to rein back demand in these countries. So it's not just the West that has to find more sustainable growth. Emerging markets also can no longer be reliant on growth in Western, I've left out Japan when I say industrial countries. It's harder to say Western Japan, but take Japan as being included in the West. But it's very hard for these countries to get back to those levels of growth without some restructuring. They became too dependent on external demand, especially coming from industrial countries. So everybody has to change, not just the industrial countries, but also the emerging markets. When you look at the industrial countries, there are two big changes. One, which needs to happen, is happening already in countries like the United States, has to move to Europe. And that is regenerating growth through increases in productivity. In the US, this is happening as a result of innovation, as a result of the new oil finds. That is creating stronger growth, held back by all the debate about the fiscal. I'll come to that in a second. But in general, the US seems to be back in action, and that's partly because its companies were little affected by the Great Recession. Its industrial companies were very productive, very profitable, and it cleaned up its financial sector soon after the Great Recession. So the US is back on track. Europe is struggling with the consequences, but it's also struggling with the fact that even before the Great Recession, it had very low rates of growth. Europe was growing at 1.5% a year. It was growing at very low rates of growth. It also has another problem with the US, which the US doesn't have. It has a rapidly aging population. Combine the rapidly aging population with low productivity growth, you have a very slow Europe, even forgetting about the crisis. Add to the fact that they haven't cleaned up their banking system. The banking system is proving a headwind to growth, and Europe is growing far too slowly. But in general, what the industrial countries have to do is to find new sources of growth. Some of it will come from reforms, liberalizing various markets, including labor markets in their countries, but some of it will come from finding new markets. And which new markets exist in the world? It's markets like our own: India, Mexico, Malaysia. These are the markets that are growing. Africa is a promising market. These are the markets that the West will turn to once it's fixed its problems. So one is finding those new markets, finding those new sources of growth. The second important thing that the West has to do is default on old promises. What do I mean by that? The promises that were made in the 60s of the welfare state in the US, in Europe, are now unsustainable. They were made, in fact, the Social Security promises that were made in the US enacted Social Security in the midst of the Great Depression, when they saw many old people in extreme poverty. At that point, they said, you get Social Security, you get a pension when you cross age 65. The average life expectancy at that time was 65. So in general, the expectation was that few people would benefit from Social Security. It was a very affordable program. Now, of course, life expectancy has increased considerably, but also healthcare costs have increased considerably. And the system that was put in place when growth was strong in the post-war era, 50s, 60s, 70s, and when life expectancy was relatively low, when the healthcare was relatively cheap, that is now unaffordable. Okay? It's true of Europe also. With its aging population, the kinds of promises that have been made are now unaffordable. So these countries have to default. They either have to default on their Social Security promises, they have to default on their healthcare promises, or they have to default on their public debt. My sense is most of these countries will not default on their public debt, at least explicitly. There might be higher inflation, but the kind of explicit defaults that you've seen in Greece is not going to become the norm. But that does mean they'll have to renegotiate their pension promises, their healthcare promises, expect a lot of political conflict over the next few years in these countries as they deal with that. But the net effect, once they deal with that in the next 5 to 10 years, will be a leaner, more efficient, much more hungry West, which is trying to grow in order to meet the needs of its population. And that means a change in the environment, because the West, from becoming a source of demand for products from emerging markets, will become a comparator to sell to the emerging markets, because the emerging markets will be the new source of demand. So that implies a couple of things. It implies first that the markets which are important are growing will be outside our window rather than 10,000 miles away. So far we've been focused on selling to the West, selling to different strange markets. Those markets will be outside our window, gives us some comparative advantage give some competitive advantage for our companies. That's good. But on the other hand, it will mean that there will be a substantial increase in competition in these areas, which means we have to be prepared. And this is why I think if we think about what is going to happen over the next 5 to 10 years, India needs tremendous structural reforms in order to be prepared. And let me give you just one example of what could happen if we are not prepared. If you remember, there was the multi-fiber agreement, which was an agreement restraining exports of emerging markets to the industrial countries of various kinds of textiles. Well, we thought when the multi-fiber agreement went out of the window, when it came to an end, India would suddenly have a great spurt in textiles, that we do very well because, after all, that was one of our fortes. Well, it turned out we didn't do particularly well in textiles. In fact, textiles in many ways is a distressed industry. On the other hand, China picked up a lot more market share, and since then Bangladesh has picked up market share, Vietnam has picked up. In other words, we are not equipped as much as some of our neighbors are to deal with the competition that might come in the future. At least the multi-fiber agreement and its cessation suggests we need to think about what we're not doing right, because this tsunami of competition is coming. So let me end with, I think, 4 questions that I think we have to ask ourselves in India. The first is, how do we create the kinds of industries, the kinds of jobs that can take advantage of the increasing markets in our own country, but also in the region and elsewhere? What do we have to change to develop a strong manufacturing sector? What do we have to change to get many more jobs in the highly productive service sector? How do we do that? And clearly, some of the issues that have been raised, we need better infrastructure. We're in the process of building it. Something like the Delhi-Mumbai Industrial Corridor, if it's underway, when it comes to fruition, will be a spectacular improvement in our infrastructure capabilities, our logistical capabilities. We need to work on things like that. Skills. How do we improve the skill base of our workforce? We have a number of missions underway. We need to make sure they actually work so that we have a whole range of skills in the population. Regulation. We've talked again and again about regulation. We've stopped talking about it. We have too much regulation. We have too much regulation of the wrong kind, sometimes too little regulation of the right kind. We need to figure out what is needed and take out what is not needed. So I think this kind of examination, this kind of debate, we need to continue, and actually at some point the debate has to lead to action. And lastly, one of the singular features of the Indian labor market is we have some of the strongest protections under law for workers. But if you look at a comparison between worker protection in India versus the rest of the world, as a country we have the least number of workers protected. So the strongest protections under law, the lowest number of workers protected, and the fewest organized sector jobs relative to the size of the population would suggest we're not doing something right. We need more debate about what's going wrong on the legal side. We need to think about the second important thing, think about the relative role of the private and the public sector. Too many things are done by the public sector, in which I include the government, which should be done by the private sector. But sometimes the private sector is doing too many things which the government should be doing, is in a sense displacing the government. How do we find the appropriate roles for each? That's something we need to think about. In a sense, how do we get away from a situation where the private sector continues to game the government, and the government, knowing that the private sector is going to game it, then tries to stamp it out with a plethora of rules which eventually create more complexity than actually better regulation? How do we move away from just having more and more regulation and less effective regulation? Third, what about the emphasis on growth versus entitlements? I mean, growth and entitlements don't need to be opposed to each other. A growing country which takes along many of its people, some of it through transfers, is not a bad thing. But how do we find the right mix? We currently have programs either being debated or underway on food, education, health, as well as pensions. A key question is, how much should we do of this? Who should we target? How will these change over time? Remember, Social Security in the United States, promised when it seemed like it wasn't a big deal. You're only giving Social Security to few elderly people. Anyway, most of them will die before they actually take it, right? But over time, what happened is it changed. And it changed to the point where the West cannot afford its safety net. Are we sure we can afford the safety nets that's building up? Remember, in some ways, the problem with Latin America and why it stopped growing was before it grew to a reasonable position, before it grew wealthy, it essentially created the social safety net of Western Europe. And that created problems in its growth. So we need to debate how much. Certainly some is important, but we need to debate how much, both in terms of equity, but also in terms of productivity and growth. And finally, the last point at which I'll stop, we need to debate the relative merits of catch-up, which we have many years off, but also innovation. How do we leapfrog from where we are to a more advanced economy? How do we get more innovation in the economy? What are the things we need to do on education, on spending? Does it have to be innovation through the universities? Can it be innovation through new labs set up partly by the government, by the private sector? But we need to think about whether we need to follow the same pattern of growth that other countries have followed, slowly doing the industries like textiles, etc., and moving upscale, or whether we can leapfrog some of the old industries and move into new sunrise industries. What do we need to do for that? So let me stop with this as a preamble. Happy to take questions, and I know Abhijit wants to pile into whatever I've said and criticize it. So we'll have an exchange immediately after that.
Thank you so much, Raghu. As I absorb the learnings from what you just said, it's the last bit which probably is the most crucial thing, which is that can India afford these safety nets? It's a great idea to provide a safety net for the rural poor, but is this profligacy of creating that safety net and the execution of that safety net going to cost this country? We know that there is a specter of a ratings downgrade primarily because of the same safety nets that we have created over the last 9 years. I don't think there'll be a better person to take it from here, because Abhijit Banerjee studied at Calcutta University, which incidentally is my alma mater as well, and the Jawaharlal Nehru University, before going to Harvard University, where he received his PhD. He's one of the founders of the Abdul Latif Jameel Poverty Action Lab, which has grown into a global network of researchers with the aim of fighting poverty with good policy and to find out, for instance, if aid to the poor actually works. Abhijit is the author of the critically acclaimed Poor Economics and has made a documentary called The Name of the Disease. If you want to know what he's like, a review of his book in The Guardian says, Banerjee writes like neither an economics geek nor an anti-poverty campaigner. He holds unconventional, actually controversial views, especially on aid and whether it affects the lives of the poor, a question that India is now asking repeatedly. This makes him just the right person to be here as India gears up for elections and the government opens its purse strings for schemes all over again, which are actually intended to alleviate poverty, but could be an instrumentality to garner votes. I present to you Dr. Abhijit Banerjee.
Thank you for that kind introduction. Actually, what's awkward about speaking about Raghu after Raghu is that I'm going to agree with him too much, and it's going to be boring. But I'll try and force myself to disagree a little bit. So I think on his view of the global economy, for the most part, I think he's right. I think that what happened was, I think the global financial crisis, in a sense, brought out a set of, I think, critical fault lines within economies in both Europe and the US, which were already there. This is so, I think the primary diagnosis of where we are is that there were problems. We were somehow chugging along without facing them, and I think the global crisis has made us face those problems head on. And I think where I'm maybe more pessimistic than Raghu is in the recovery. I think both the US and Europe are, in my view, in throes of crises which are not yet resolved at all. I think the US, what happened was, the US is a country which has, I think, a paranoid fear of government action and of taxation. And what happened in the US, so the US, I think, primarily, all these worries about fiscal unsustainability are made-up worries. US is undertaxed by OECD standards and could easily afford to have higher taxes. The problem in the US is political, and it's a theme that I have to keep coming back to. The problem in the US is mostly that the US as a country was conceived of in the middle of a tax revolt. Maybe that's not how you conceive of a country to start with, but as a result, it's a country where taxes, there's a paranoid, I think, hatred of taxes, communism as delivered by, for example, the famous communist Barack Obama and other such, intrusions of socialism. So it's that paranoia in the US is what you see shaping the fiscal debate right now. And it's a paranoia that I think was accentuated by the financial crisis. That let the genie out of the bag, because in some sense it made it clear that the government was suddenly looming large. It was doing stuff. It made everybody's fear of government and taxes and stuff like that come out. And we're in a phase where the amount of, I think, irrational, just random rants that you hear from the Republicans all the time is sort of, I think, by a sort of historical high. So I don't actually think the US is out of the woods. I think the US will lurch from fiscal crisis to crisis, and that's going to do some damage. I think the economy is recovering. There's lots of good things about the US that make it such a powerhouse, and such a powerhouse that we would like to emulate, but I think there is a crisis. Europe has, in a sense, a very different crisis. What this brought out was basically, the crisis brought out was, it forced a certain amount of borrowing, and that brought out the basic fact of fiscal unsustainability throughout Southern Europe. Basically, there was some bad luck. I think Spain had some bad luck. Italy, I think, mostly got what it deserved. France may get what it deserves. So there's a bunch of stuff there which is just very poor use of resources. Lots of transfers from the middle classes to the middle classes, which go through a government mechanism which manages to lose a substantial part of it. So you take money from A, give him to A, but takes 40 cents out because you wasted it along the way. So Europe has, I think, the question of entitlement reform in Europe is key. It's very political, and certainly right now Europe is not in a place where it thinks that that's the popular view in Europe is not that that's what it needs to do. So it needs to be there's going to be a set of, I think, heart-wrenching choices to be made. I don't see it happening. I think it's going to take 15 years for Europe to get into shape. I do think that there will be, the euro will need to be renegotiated, and hopefully what it will renegotiate to is a debt compact of some kind, but could be that will fall apart, part of both. But I think lots of things going to go. So that says, I think, reinforce what Raghu said. I think if we look to the West for a source of growth, I think we're going to be waiting for a while. I think there's going to be now that's I think we also should say that that's less of a worry than we made it out to be. Our growth, if you take the years 2008, 2009, 2010, was domestic driven, but that's been true most of the time. We are a very large country with very little actually trade, so we live off domestic demand. So I don't think that we are going to be, I don't think there's a huge amount of, this has consequences for us, but there's lots of demand out there. Africa is growing, Brazil is growing, China is growing. In principle, I don't see this as being as much of an issue as sometimes it's made out to be. Now, having said that, we are kind of, our problem in a sense is interesting, because it's not that we have a unsustainable debt and that we are, but somehow we have flavor, a little bit of a flavor of being Italy. So in a sense, Italy is the worst of, in my view, of all. I mean, this is a good day to be bashing Italy in India, but it really has the worst of all worlds, because it's undertaxed and and the government is overextended. And I think on both sides, the government does too many things, does it badly, and it doesn't do the main job of collecting taxes. And we have a little bit of that, so that's sort of the problem of the US plus the problem of Europe. All are sort of focused here. We have, I think, a government that, I think we're undertaxed, massively undertaxed in my view. I think there were 47,000 people who are declaring incomes over 1 crore. That's a number that should make all of you laugh. I mean, that number, if you look around in Delhi, who's buying those things? The Ferrari dealership, who's there? I mean, there's just the numbers don't add up. And so in some sense, we should be aggressively thinking of how to, close the tax loops, get the people into tax net. And on the other side, so that's one side of it. I think we are completely, the rich here are, and I know that this is not the audience, which is not the poorest people in India who are in here. So, but I say that with full cognizance of that. I just think there is we are really, China has over the last 25 years increased its share of GDP that's taxed from, I think, 13% to 24%. I mean, and that's at a time when public sector companies in China are being shut down, so it's the revenues are losing revenue in other places, and then spending has been growing, and it has been financing it mostly by, I think, more effective taxation, and we haven't done it. So that's a first fact. Second fact is that with that, we also are subject to all the other things that make Italy unsustainable in a sense. I'm going to stop bashing Italy now, which is that we are a country that has got into this populist, the populist temptation has grabbed us. And it's something that's, it's very easy to legitimize, because we have so much poverty, so much completely unwarranted poverty, so much indefensible poverty. So it's very, very easy to make the case that we need to do something. But then I think the issue that was just raised on, is the government going to open its purse strings? The real problem is not that it's going to open its purse strings, but it's going to open its purse strings without fixing any of the previous attempts to open its purse strings. So it's not that we do too much for our poor. I think that idea that we're creating lots of entitlements which we shouldn't be doing. We do very little for the poor. As I said, we're an undertaxed economy with actually fairly limited redistribution. We've been expanding it, but I don't think we do a huge amount of our redistribution from the middle classes to the middle classes. You think of the CNG subsidy and the diesel subsidy and the water subsidy and every other subsidy that we provide to the middle classes. So it's not that the rural middle classes, the urban middle classes, the fertilizer subsidy, every one of these subsidies are the biggest beneficiary of these are not the poorest people. So I think if you think about where we are, I think it's not entitlements for the poor that we need to reform. It's entitled for the middle classes we need to start by reforming. Now, having said that, I think we are in a mode where we think that now we've discovered that we can find ways to buy votes by giving away stuff. And this election year, it's going to happen. And I think that the real danger of that is that it doesn't force us to confront the administrative needs of each program. So I think if I think of where we really taxing the government, I think much more than even in money, is we're taxing its competence. Every new program creates a set of things for the government to do. Our civil services are very, very small relative to our size. We don't have our government in general, I think, is too small. I think it's the capacity to implement these programs are not there. And we know that. So every new entitlement is created. Why? Because the previous one only delivered 20% of its value. So we never try to fix a program. We never take the view that, if this one isn't working, our job is to make it work first before we go to the next one. It's always, let's put another one there. And in particular, right now the fashion is, let's call it a right, and therefore we're going to think of the courts as enforcing them. So if we are not going to even take the obligation to implement them, we're going to just say this is a right and somehow it has to happen. And now we think that the courts are going to do it for us. But the courts are, then like any other Indian institution, if you've been to a court, you know that, the hopes that the court will make 4 million people who are cheated of their NREGA rights all be able to get those rights. This is just not going to happen. So in some senses we have shifted, we haven't taken the question of how we implement head on at all. And I think that's our central challenge. Our central challenge as a nation is not, I don't think we should worry too much about we're giving away too much money right now. I think we should be worried about the fact that we're doing it so badly. And I think that's the challenge of democracy. When I work a lot on politics in rural India, and the thing that you see is people, every time you give away something that doesn't work, that increases anger. People actually think, okay, they promised me this and then they didn't deliver. And somehow the political class needs to internalize that. They need to realize that promising something and not giving it is worse than not promising it. And I think that general thought that in some sense, I'm glad this is a conclave about democracy, because I think that thought that how do we get the political class to confront its own sort of proclivities, how do we get it to talk about stuff about, the difficult choices, how to get things to work, how to deal with the lack of administrative capacity, how to expand the administration in the right way, how to build institutions that work. These are sets of questions which are central, but in some sense it's the ones that we allied most. And so I think that let's keep talking about the global economy. I think those are interesting questions, but I think if we want to look at where we are going to get stuck, we're going to get stuck on our internal mechanisms. And that's where we are basically a large country. We could mostly ignore the world. But I think if we are slowing down, it's more because we haven't created a culture of governance that will serve our growth than because the world economy has, is in long-term decline or not. I think those are important issues, but I think if we have to think about it, I think we should need to go back to our own I think the problems we have created, the problems we have not solved, and the problems we're trying to look away from. So I'll stop there. I can keep going, but I think there will be more interesting things that we'll hear from the audience. Thank you very much.
As you know, without wasting too much time, as you know, we've started a new segment this time at the Conclave. We have an expert panel of eminence, and I think they should ask the questions. Rajiv, if you wanted to, if you could start and you could address the person directly.
Thanks, Anip, and great listening to both. Hello. Yeah, sorry. Great listening to both of you. And Raghu, thanks a lot and to Abhijit, that neither of you actually even once said that our current slowdown is attributable to the global economy, because that's really what it is not. And so I put it to you, Raghu, and then I'll ask a question to Abhijit, which is that, given that our share in global is 1.6%, our exports are 306 billion, China's are nearly 2 trillion, $1.89 trillion dollars. And the foreign trade policy is just going to be out to be announced, which again, I'm afraid, year after year, will probably announce a list of handouts, on fiscal incentives. And I've actually done the survey where the exporters, a large percentage of them say, they'll rather not do those handouts because they're uncertain, they're unclear, and the transaction cost of getting them is very high. They would rather have infrastructure improvement. So you talked about competitiveness. Would you be able to be in a position to influence the foreign trade policy that it veers away from its usual annual direction that it takes and actually sort of addresses the real issues which you have already pointed out about competitiveness of the Indian industry? And to Abhijit, you sort of course, you hinted and very well the governance deficit that we have today. But I think neither of you, and the question goes to really you because you've done this poverty thing, the real poverty reduction comes out of employment, creation of employment. And you know that we need 1 million new jobs every month in this country. But I'm afraid neither of you mentioned that as a problem facing our country today. What is the way forward for that, given that our manufacturing sector stagnates at 15%, our agriculture, has 50% of our population, produces, 14% of our GDP. How is employment the focus of government in this country today? I'd like to know that.
If all the questions are crisper and shorter, then the answers will also be crisper and shorter, and then we'll get that much more packed into the session. Raghu, if you would like to.
Okay, quickly. Can you hear me? No. Okay. Very quickly. First, I just want to correct something. Abhi said we're not dependent on the global economy. For sure, on net dependence on foreign trade for growth is relatively small, but we are very well integrated. 43% of our GDP is what the sum of exports and imports are. So we're not immune to what happens in the rest of the world. We do have some exposure. That said, I agree our slowdown now cannot primarily be attributed to external factors. They are important, but I think the primary factor is domestic. That goes to the point about jobs that you mentioned. I think absolutely, and I was trying to mention it, it probably didn't come out clearly. Jobs are, in my view, the best form of inclusion. Can we train that person up to become a productive plumber, a productive software engineer, or something even better? But I also agree with Abhijit that in some sense I'm not disagreeing with the need for transfer programs, for welfare programs. But I think what he was trying to say, which I agree with, is they have to be very carefully targeted and they have to be efficient. We cannot, as a relatively poor country, afford poorly targeted and inefficient welfare programs. We have to make every rupee count there. And therefore, I would say we need to go more in that particular direction.
On employment, the problem with, I think lots of people say employment. The problem is employment is an outcome. It's not an instrument. We can talk about labor laws. We could talk about skilling. We could talk about productivity improvements through other interventions, and all of those are important. I think the thing where I feel that particularly, I think if you look at the current ASR results, they should freeze our blood. I mean, the last 5 years, the proportion of people who have the most minimum skills, like children in class 5 who can do class 2 math, has declined by 10 percentage points. This should freeze our blood. I mean, we should be, if we think of, how we're going to generate employment, these guys are not going to be employable. We're going to talk about we have the youth dividend. Think of these guys, if they can't even do second grade math, what's the dividend? I think that at some level, we can't talk of employment till we have a clearer sense of skilling. And if someone asks me a question, I'll go into a rant about the right to education.
Surjit, if you'd like to ask, and I think it makes more sense if you ask one of them so that we'll get more questions in.
Actually, the question that I will end up with now, 2 questions, I'll be very short, but applies to both of them. First, just a factual point on Abhijit. I don't think you mean that India is undertaxed. It's certainly low compliance, but with a 17% to GDP tax ratio, we are well above what a typical country with our per capita income is. And China is 3 times our per capita income, and therefore it's at 24%. So, but I think certainly compliance is very, very low. So I think that's one. Second is, Europe is overtaxed and wasted welfare expenditures, and US is undertaxed and too little welfare expenditures. So which would you prefer? Now come to the third and final question, that both of you, and you're the ideal guys to help answer this question, have a lot of experience with a lot of countries in the world. Do you come to the conclusion that India is unique in its decision making? Have you seen the kind of policies that we make and that we do not make in any other country of the world? And if so, which ones?
I think the third question is the one
I'll
that
start with the third question.
was really...
I think
yeah.
the country that frighteningly we look like is Brazil, 1975. So Brazil grows at 9% from 1961 to 1980, then stops growing for 20 years. Absolutely zero growth, basically, from 1980 to 2000. And Brazil is exactly us, in a sense, in that sense. Programs pile on programs, because, nothing is getting delivered, so let's have a new program. And they kept doing this, and at some point, basically, the global economy collapses, and Brazil is borrowing to do that. Brazil now can't deliver all these, they created expectations that they're going to deliver all these things, and everybody's going to get entitlements. And the biggest entitlement, let me again say one thing to emphasize, is not the entitlements of the poor, but the entitlement of the middle classes. What happened was teachers were expecting salary increases every year, which were not commensurate with the growth of the economy, but they were not expecting to do any more work for it or anything like that. And I think those entitlements we create, teachers' jobs which don't involve actually doing any work, nurses, the average attendance rate for nurses in Rajasthan, where we did a survey, was 44%. 44% of the time they were at work. 56% of the time they were somewhere else.
Raghu?
These jobs, yeah.
I think Abhijit is pointing to the following danger. I mean, we all have programs. We talk about programs for Aam Aadmi. For our foreign visitors, that means the ordinary person. So I went around the office the other day asking, who is Aam Aadmi? And the best answer I got was, Aam Aadmi is me. So that's the danger of the kind of policies which focus on, which are poorly targeted, which focus on the middle class, which tend to spend a lot of money in the wrong ways. And then the scare story is of Brazil. But Sujit, you asked, are we unique? I think we are. Because we are one of the few countries that is trying to grow out of poverty with democracy and has at least made a go of it so far. I think it's useful to use Brazil as a scare story. I don't think we're there. I don't think we should get there, because I think Brazil did not have democracy when it went through this period of slow growth. I think democracy creates self-correcting impulses. And hopefully, as we veer off track, which we did perhaps over the last couple of years in terms of growth, we've also had the self-correction come from the democratic process, and we will get back on track.
Rajat? We're running out of time, Sujit. Rajat, please.
Thanks, Abhijit and Raghu. It was great listening to your wonderful diagnosis. I have a question to both, or it's in the nature of both a question as well as a comment, and both of them kind of hinted, and Abhijit talked about it a little more, is the governance deficit and the need to actually put our own house in order, and a lot of structural changes that Raghu mentioned. And even in the previous session, President Kalam mentioned that the rule of law has not delivered what it had promised. So my question is, given that it was so difficult creating economic regulatory institutions, even in the West, even in mature democracies where institutions are relatively easier to create, for us, low income, moving to middle income, creating these economic regulatory institutions to ensure that the trickle down happens. And Raghu has written a lot about crony capitalism. The benefits of the growth have been kind of restricted to a few. Will we just have to accept this regulatory or governance deficit and muddle through, or is there something more that can be done?
Raghu?
Well, I think I think what happened in our period of strong growth is we outran our institutions. I think there is catch-up going on. Some of our institutions said, hey, wait a minute, you didn't create the right processes. The CAG, the Supreme Court intervened. And I think we're in the process of looking at that and saying, okay, How do we recreate that? So I think, you should see the cup as half full, that some of our institutions worked and are helping reform the structure so that we adapt to the kind of growth that we had and make that growth more supportive with better institutions.
One last question, Ajay, please. You can ask Abhijit.
Farmers come last. And the question is very simple. Both of you have talked of growth, and it's been absolutely not equal for farmers in India. We have missed the growth story. 50% of farming, people are involved in farming, and most of it, for most of them, it is unprofitable. Do you think removing farm subsidies will give equitable growth to more than half of India? Because you have consistently talked about capping farm subsidies. Do you think capping farm subsidies will make farming a profitable profession for 50% of India? Because that's creating jobs on the farm.
Raghu?
I think the longer run solution cannot be keep subsidizing farming. I think it has to be to make farming more profitable for the people remaining in farming. And that's why I think part of the answer has to be what I think Rajiv talked about earlier, get more jobs outside of farming for the people in farming, so you leave fewer people who can use more land and therefore make a better go of it. One of the factors that you must have noted is the increasing fractionalization of farms, which is part of the reason for unprofitability. They're getting smaller and smaller. How do you make it such that a farmer can earn a decent living? Sure, there might be subsidies going forward, but what you want to do is make sure that farming itself is a more productive occupation. How can you create more productivity in farming? That should be our focus.
Abhijit, if you'd like to add quickly.
I think if we want to subsidize farming, we should stop doing it the way we do it, which is through using water subsidies. It's a disastrous way to subsidize because the water table is falling, Punjab is in crisis, and many other places will be soon, and fertilizer subsidies. I mean, those are just the worst places to subsidize. We're distorting the environment, we're distorting all the resources, scarce resources. We want to subsidize them, let's just give them money. It's much easier than doing all this loony stuff.
Thank you.
Sir, no,
We'll have to close.
Sir,
I'm sorry.
I need to say this because I definitely disagree with it. As far as fragmentation of land holding is coming, Mr. Jairam Ramesh has given a statement that land holdings are very large in India today, and we need to fragment them further. And so that's what you have to go along with it when you make policies. And farming needs to be profitable. It does not have to be through farm subsidies or fertilizer subsidies. But first you have to make it profitable, and then you can talk about removing these subsidies. You cannot say we'll remove subsidies, make farming profitable, and move people out of the farming sector.
We could carry on, but time is of the essence, and we have a timetable to keep. I'd like to thank both the panelists, Raghu and Abhijit, and thank you so much.
Can I request Mr. Puri to please come on stage and give a token of appreciation to the speakers? Can I please request both of you to stay on for just a minute?